Good day, everyone. I hope you are all well. We are tax honors students at the University of Pretoria. Today, my colleagues and I will be giving you some insight on the Tax Administration Act. Since the Tax Administration Act is a very broad topic, we try to keep it brief and easy to understand. What is the purpose of the Tax Administration Act? The purpose of the Tax Administration Act is to guide taxpayers to ensure tax is paid and collected accurately and fairly by providing guidelines to ensure collection on the one hand and facilitating a system of objection and appeal whereby taxpayers can be assured of fair treatment and in the case of errors be refunded if applicable. Now let's look at the general overview. Here are the topics that will be discussed. We'll look at registration, submission of returns, duty to keep records, interest and penalties, payments, dispute resolution, and recovery of tax. Registration. Everyone who earns an income must be registered as a taxpayer by law. That is a company or a natural person. You can register online with the help of your employer, visit a SARS branch near you with your ID and confirmation of banking details. Once a person is registered, they will receive a tax number, a TRN, which is your tax reference number from SARS. Returns. The Tax Act refers to returns in most instances where information needs to be submitted to SARS. A return will generally be in the prescribed form, for example, Form ITR 12 for income tax, which can be obtained at a SARS office or on the SARS website. Each taxpayer must keep records of their income and are required to submit the return in the prescribed form and manner. If you are self-employed, you need to have records of each month of your income. Employed, a payslip from your employer. SARS will compare this with a report from your employer. Tax returns have to be submitted by taxpayers as required by SARS. Now I will hand over to my colleagues who will take you through the remaining topics.
Good day. I will be taking you through records as well as interest and penalties. So, starting with records. The Tax Administration Act imposes a duty on a person to retain the records, books of account, or documents needed to comply with the Tax Act. I will be discussing three main points under records: who should keep records, in what form must records be kept, and for what period must records be retained. So, who should keep records? The requirement to keep records for a tax period applies to a person who has submitted a tax return, those required to submit a return, and those who did submit a return but received an income, etc. In what form must records be kept? Records must be kept in original form. For what period must records be retained? When a person submits a return, they are required to keep records from the date of the submission of the return until the last day of a period of 5 years. It is important to note that all relevant documents should be kept for 5 years. Now, moving on to interest and penalties. If a taxpayer fails to pay their tax in full by the required date, interest will be charged on the outstanding balance for the tax period from the prescribed date until tax is paid. Penalties. There are two types of penalties: the administrative non-compliance penalties as well as the understatement penalty. In terms of the administrative non-compliance penalties, these are charged when you do not comply with administrative requirements of the Tax Act. You can either be charged a fixed penalty or percentage-based penalty. The understatement penalty. This penalty is charged when a taxpayer makes their tax liability less than what it actually is. The taxpayer must pay a penalty in addition to the tax owed for that tax period. The purpose of this penalty is to discourage unwanted reporting behavior from taxpayers. I will now be handing over to my colleague who will take you through the last few topics.
Good day. I'll be taking you through the last three topics, namely payments, dispute resolution, and recovery of tax. Payments. Payments should be made on a date and place determined by SARS, commissioned by public notice, or specified in terms of the Tax Act. A SARS official can accelerate a payment date if the following reasonable grounds are met. A taxpayer will not pay his debt, dissipate his assets, or find difficulty in paying the tax. Payment must still be made even though there is still a dispute, unless a taxpayer can request for a suspension of payment. Taxpayers should settle their tax liability in a single amount unless there are financial hardships. Dispute resolution. Disputes occur when there are differences of opinion between SARS and taxpayers. Process is as follows. A taxpayer can request for reasons for an assessment made by SARS. If taxpayer does not agree to reasons, they can object to assessment or decision. If an objection is disallowed, taxpayers can appeal against the disallowance. A taxpayer can ask for an extension between the stages mentioned above. Objection can be heard by one of the two, namely alternative dispute resolution. This is when the matter is resolved through mutual agreement, or litigation process, which involves going to the tax board. This is when the matter does not exceed 1 million. Tax court, this is when the matter exceeds 1 million. If a taxpayer is not satisfied, they can appeal at the High Court. Amounts can be final after this stage. If all internal measures have been exhausted, the taxpayer can resort to the tax ombudsman for further help. Recovery of tax. When a taxpayer fails to pay an amount of tax due by the due date, SARS has several measures at its disposal to recover the outstanding tax debt from these assets. Thank you.